Welcome to what might be the most crucial video I've done in months. Right now, as I'm speaking to you, silver is absolutely demolishing previous records, pushing toward territory we haven't seen in decades. Gold, same story, but here's the thing. I've got something critical to share with you today that goes way beyond just price movements and chart patterns. There's a warning I need to get out there, and trust me, this affects every single person who holds physical metal. This comes from a breaking news story that you might have missed, but it's absolutely essential information as we watch these prices climb at this blistering pace. And here's what makes this even more interesting. I've been getting bombarded with questions on social media from stackers and non-stackers alike, all asking the same thing. Now that silver's gone parabolic, what's your game plan? What happens next? Wanting but easier. So stick with me because I'm going to lay out my complete strategy for navigating this historic move. I'll show you exactly what I've been doing personally, not as advice because that's not what we do here, but as a window into how someone who's been in this space is thinking about the current environment. Before we dive deep though, let me remind you that if you're looking to acquire physical metal before spot prices rocket through that $100 psychological barrier, and we're talking less than $4 away at this point, then you need to know about SD Bullion. Trusted by hundreds of thousands of customers, A+ rated by the Better Business Bureau, and home to the Scottsdale Mint Eagle Stacker Silver Round with that beautiful precision crafted interlocking design available in multiple sizes. Head over to sdbullion.com where America goes to buy physical gold and silver. Now, before we get into the warning that every stacker needs to hear, smash that like button right now, drop a comment telling me what you think is coming next for silver, and make sure you're subscribed because the content coming your way is about to get even more intense. All right, let's rewind 24 hours. Remember that pullback we saw yesterday? That quote-unquote sell-off where silver dipped down to around $90 after President Trump announced he's backing off those February 1st tariffs on the EU related to the Greenland situation? Apparently, they've reached an agreement. We get access to land, natural resources, military base locations, the whole package. The market reacted, silver pulled back briefly. If you managed to catch that dip, congratulations, because today we're sitting almost $6 higher from yesterday's low point. I've been saying this throughout this entire run. Expect turbulence, expect volatility, but the overall trajectory remains upward for the foreseeable future. Right now, silver is consolidating inside a defined channel. My expectation, we're setting up for an upside breakout, and interestingly enough, that breakout level aligns almost perfectly with the march toward $100. When we punch through this channel and the breakout point sits around $97, I believe we're going straight through triple digits. Will we see resistance at 100? Maybe. We might touch it, pull back to retest support, then launch higher. But here's my conviction. $100 is not the ceiling. If you've been following my analysis, you know I've been pointing toward $120 as a far more likely destination for our first significant resistance zone. That target comes from the real inflation-adjusted calculations using money supply data. I won't dive too deep into the methodology today, but understand this, we're nowhere near a top. Let me show you what's happening with gold real quick. Zooming out on the chart, gold has broken free from this ascending pattern and is absolutely ripping higher today. We're sitting $80 away from $5,000 per ounce. I mean, think about that, $5,000. We could hit that before January ends. What does 2026 have in store? Much higher prices than 5,000 in my view, but we need to cross that threshold first. Today alone, gold jumped $88. If it repeats that performance tomorrow, we're over 5,000. That's remarkable. Now, I posted something on social media that really resonated with people, got significant traction because it addresses this question everyone keeps asking. What do you actually do with your silver now that it's climbed so dramatically? Let me share my thoughts with you. I've been seeing people ask what to do with silver after these massive gains. Here are my thoughts. First, silver is very likely nowhere close to topping out. This metal just broke out of a 46-year cup and handle pattern. Moves of that magnitude don't resolve in a few months. On a logarithmic scale, high triple-digit prices aren't unrealistic, especially considering the pace of currency creation and the Fed already drifting back toward quantitative easing territory. For those new to this space, and welcome by the way, please subscribe to this channel. The pattern I'm referencing is this cup and handle on a log chart. On a standard arithmetic chart, the difference between the bottom of this pattern around $3 and the breakout point at $50 is about $46.50. We've reached $96 today. You'd expect that difference to be added to the breakout level. But here's the key. If you measure this in percentage terms rather than nominal values, we're only a fraction of the way toward the expected target. A percentage move matching the distance from the cup bottom to the breakout point applied from $50 gives you high triple-digit silver prices. That's where I believe we're ultimately headed before this bull market exhausts itself. Second point, this doesn't mean straight up forever. Volatility is built into the process. Structurally, this still looks like early innings, not late stage. Could silver correct? Absolutely. It could hit 100, then drop back to 70. That's within the realm of possibility. Anyone who's followed silver for any length of time knows it can rocket upward and plummet just as fast. It takes the escalator up and the elevator down. Personally, and this isn't financial advice, I view those drops as accumulation opportunities. And that's been my approach all along, and it's worked out pretty well so far. Third point, I do use paper silver vehicles to take profits, rebalance, and rotate into income-producing assets when it makes strategic sense. I haven't sold a single ounce of physical. However, I have traded options on ETFs like SLV. I've owned miners. I've taken profits on some positions, though I still maintain a substantial holding there. For me, the first place to take profits is paper positions. And speaking of strategies, make sure you hit that like button if you're finding this valuable, comment below with your current thoughts on the metals market, and subscribe because we've got that critical warning coming up that you absolutely need to hear. Fourth point ties back to the third. My core physical stack is different. I don't treat it as a trade. It's insurance against a sovereign debt crisis. At some point, I might roll some into gold if the gold to silver ratio compresses enough, say to 30 to 1 or 20 to 1, but that's risk management, not trying to sell the top. I haven't sold a single ounce of physical silver, even though it's well above my dollar cost average now, and I probably won't anytime soon. The ratio would have to hit historically low levels for me to consider swapping silver for gold. At some point, if silver prices reach levels where I'm extraordinarily concentrated in physical metal, I might sell some. But for what? Fiat dollars? No chance. I wouldn't want to sit in dollars for any extended period because it's clear the dollar is being systematically devalued. But rotating into income-producing assets in undervalued sectors, that might make sense. Right now, again, not financial advice, the energy sector looks appealing. It looks cheap. Could it get cheaper? Sure. Could oil and gas drop further? Absolutely. But you look at what's relatively inexpensive and consider opportunities there. Let me show you something interesting from today's price action. Switching to a daily chart, look at what outperformed silver significantly. Silver was up 3.23%. The CLJ ETF, the Junior Silver Miner ETF, was up 7.73% on the day. If you're thinking about the different ways to gain exposure to silver's rise, the junior miners, granted much riskier than physical metal, but also potentially offering much more upside, show you what I mean. Looking at the ratio of SILJ to silver prices going back to 2012, You can see we're near the low end of this ratio, meaning silver has been outperforming the miners thus far. The miners have done well, but silver's been moving faster. Eventually, I believe this ratio will shift. Once silver maintains elevated prices for an extended period, miners get the chance to bake those higher prices into their earnings reports. They report earnings reflecting sustained higher product prices. I think it makes sense to consider positions in miners here. Not financial advice, but that's what I've been observing. Some people taking profits on leverage paper positions like SLV and building miner positions. I haven't sold physical because tangible assets in your possession don't carry counterparty risk. Very few assets can claim that. When I look at US debt levels, when I consider what happened with bond yields recently, when the Japanese 30-year bond yield jumped 8% in a single day, that's frightening. Bond yields worldwide were soaring. Those have normalized somewhat after the tariff situation with Greenland and Trump's announcement, but another catalyst could prick this debt bubble. I want all my physical metal when that happens. Now let's get to this warning. This is what stackers really need to understand. This story was posted January 22nd. Thieves emptied Dutch Silver Museum in early morning heist. This is a historical museum in the Netherlands called the Silver Museum, and its entire collection of silverware was stolen. These are cultural objects, and I genuinely hope they're not being melted down. Maybe some eccentric collector will acquire them for a private collection, but it's concerning when rising silver prices lead to priceless historical artifacts potentially being destroyed. Let me read the details. Wednesday morning at 4:30 a.m. local time, two men forced entry into the Dober Silver Museum housed in the 13th century Martini Church. The thieves, caught on security camera footage now being examined by police, used crowbars to open a door and shattered display cabinets. They stole more than 300 pieces of silverware worth tens of thousands of euros. Among the stolen items was a precious collection of mustard pots assembled by the museum's founder, Martin Delalane. The museum chairman stated, "The silver price is high, but for us, it is about more than the silver price. It is about the stories behind every mustard pot. It is history and cultural heritage. We are enormously disappointed and angry." Here's the critical point. As precious metals prices climb higher, you're going to see more incidents like this. As a stacker, you could become a target. When silver is rising rapidly and potentially just getting started, the value of your stack is increasing, and you're not the only person who knows that. Consider investing in security. Do what's necessary to secure your stack. Diversify storage locations. Don't put all your eggs in one basket. Consider safes, security systems, whatever's appropriate. You can explore buried storage options. You can look into allocated storage offsite if you don't want responsibility for custodying all your metal. It depends on how much you have. There's no one-size-fits-all solution. If you're in the US, you can explore your Second Amendment rights, something many people consider anyway. You can't make yourself invulnerable, but you can become a much harder target. This is a real consideration as the market continues climbing. I know it's exciting watching silver appreciate, and there might be vindication for those who've been telling friends and family about the importance of tangible assets, but maybe tone down that conversation as prices rise. Resist the temptation to say, "I told you so." That's probably not the smartest move. Keep your cards close to the vest. Keep quiet about your silver holdings and you'll likely be fine. But stackers should absolutely be aware that security risk increases. Even though your ounce count stays the same, the value, both nominal and real purchasing power, is rising. Just be cautious. I wouldn't be surprised to see more stories like this. Before we continue, do me a favor. Smash that like button, leave a comment sharing your security thoughts or strategies, and subscribe because we're diving into some fascinating data from China next. Now let's look at something else. Gold is approaching $5,000. You might think that's expensive for a 1-ounce bar these days. A kilo of gold might seem out of reach, but you can still acquire fractional gold through various options. Goldbacks are showing 976 on goldback.com. That's the price merchants should accept them for. You can get 1/1000th of an ounce of gold at a time. You can actually get 1/2000th with half gold-back notes. Look what's happening at SD Bullion as gold prices spike. Goldbacks are selling out. Those boxes, $30,000 to $40,000 boxes, sold out. More SKUs are disappearing. Many people are skeptical of goldbacks primarily due to premium concerns, but the secondary market is strong. Goldbacks have performed well because they track gold prices. Not financial advice, just observing market dynamics. But if you want gold exposure and prices seem high, fractional gold is an option. For fractionality, goldbacks offer interesting divisibility. This is different from tiny gold grains, Valcambi bars, or gram gold bars, which also carry high premiums. Old European gold coins you can get near spot, the roosters and similar pieces, are also options. But for fractionality, goldbacks are far more divisible with extensive security features. Some worry about goldback counterfeiting. To my knowledge, they've never been counterfeited. New versions have extensive security features, UV ink on the back. The machinery needed for counterfeiting would cost tens of millions of dollars. The interest is remarkable. I'm surprised how many are sold out. You might want to research that. Also, they recently launched Hades silverbacks. These are more collectible, 1/1000th of an ounce of silver. Maybe these become utility instruments if gold and silver approach parity, or if we reach a 20-to-1 or 10-to-1 gold to silver ratio. Then 1/1000th of an ounce of silver could be a useful trade instrument. For now, they're mostly collectibles. Let me cover some silver-related news from Shanghai. The Shanghai Gold Exchange silver price shows the most recent data at 24,342 Chinese yuan per kilogram of silver. Do the math, that's approximately $108.57 per troy ounce. Right now in China, silver on the Shanghai Gold Exchange, an exchange more closely tied to physical silver prices, unlike the COMEX, where massive amounts of paper ounces trade for every underlying physical ounce, people are actually buying real physical silver. Over there, an ounce of silver costs $108. Premiums remain elevated, even though silver has been rising in the US and the West to over $96 currently. Premiums are still very high, $12 over Western markets, even as our spot price continues climbing. To me, this indicates silver may be headed higher. It's not a promise or guarantee, but probability-wise, the data suggests high probability silver continues upward. Very soon, we may see a break out of the current channel silver is trading within. That seems most probable based on the charts. A correction is possible, anything's possible in markets, but the technical setup suggests silver will break past $100 very soon. The fact that it's already done that in China and been over $100 there for over a week. This isn't a fluke or one-off event. It didn't experience significant resistance at 100. It cruised past, and today it's back over $108. To me, this premium has been a predictor of Western market direction. This has been ongoing since December. Ever since those Shanghai silver premiums rose so dramatically, we've seen a strong uptrend here in the West following along. The pattern suggests more of the same. Very likely we're seeing momentum in miners, silver, gold, and other metals. Look at platinum, up 5.43% today. Let me show you that chart quickly because platinum broke out of this triangle consolidation. This happened when Trump made his announcement. it dipped back, retested the bottom trend line of that consolidation, then surged much higher. This breakout is confirmed by today's action. Yesterday's commentary created a false breakdown. That was potentially a buying opportunity for those watching closely. That's exactly how things played out. Listen, things are heating up dramatically in the precious metals market. The intensity is increasing. This bull run is accelerating, and you don't want to miss the developments. Please subscribe if you haven't already. Many people watch without subscribing. I appreciate everyone who's subscribed and been watching. Many of you have been around for a long time, and I appreciate everyone who comments in live streams, chats, and leaves feedback. I try to read all the comments. I don't always catch all the live stream activity, but I appreciate each and every one of you. I love the stacker community. You're awesome. Stay safe out there, everyone. Keep on stacking, and I'll catch you next time.